Welcome to Ownership, the podcast where we have conversations about capital formation in crypto and beyond. I'm your host, 8-Bit Penis, and this is Season 1, Episode 6. And today I'm joined by Maushish, hopefully I got that right, from Paystream. Paystream is building tooling for people to maximize their yield on every dollar. And they have raised a MetaDAO, and I believe they completed the raise in October. And in total, they had around $6 million committed and ended up taking, I believe it was 750,000. Ever since then, it's been quite a few months, and so I thought it'd be very interesting to talk to them on how they're doing. So, welcome, man. How you doing?
Hey, thanks for inviting me. Yeah, it has been quite some time. I think, believe like it has been how much, like 5 months since we have raised from MetaDAO, and we have got a lot of insights when we have like compared to when we started building from the market regarding product itself initially. Uh, but overall, it has been like highs and lows, kind of mix of both. Uh,
Yeah,
when it
so
comes. Mhm.
can you take us back to the whole raise and before that? Like, can you tell us about um, the parameters of the raise, when you started thinking about raising money, when did the idea of Paystream start? Are you a one-man army? How big is the team? And what were your initial plans before starting the ICO? And yeah.
Yeah, so I think after winning the Colosseum Hackathon, which happened last year, we started considering raising money for Paystream. And I think it was June and July when I got in touch with Profit and we had a call. I think that was the first call which I had with Profit. And after that, we were sort of going back and forth with a couple of VCs and along with Profit and Colin. It was around after Omnipair raised itself. I was sort of confident that okay, if we were to go with MetaDAO route, we would be able to raise. I was just not, you could say, wasn't that much confident in the futarchy itself around that time. And I think after Umbra, around the same week itself, I said to Profit, okay, fine, we can start the initial raise. Uh, and by like I would say fourth week of October, around 27th, we sort of finalized that, and yeah, it was mix of like I was very anxious to be honest during the time of raise itself. I was in the comms with Crew from Umbra and Ram from Avicii, and I was asking them, "Do you think is it gonna be this? Is it gonna be there? That?" Sort of lot of anxiety, but Colin was like, "It's sort of out of your hands, so it doesn't matter." But luckily, we were able to get decent amount of commitment, and we chose to go with 750K, out of which some goes to liquidity and rest goes to treasury. The whole procedure, if I have to summarize, would be like the days itself was sort of anxious, uh, but overall it has been very very well from the expectations that I had. Like it has been over the expectation, the performance regarding the mechanism itself of Futarchy, and the second thing, which is like MetaDAO raise. So both have worked really well for us.
And did you always want to do a token? Was this the primary raise mechanism that you guys were thinking of when thinking of raising money? Or
Mhm.
did you ever think
Yeah.
about raising through VCs? And I know that you mentioned VCs before, but why did you end up making this decision over that one? So
Mhm.
why did you choose this raising mechanism? instead of anything else?
Okay, so token was always in mind mainly because when you're dealing, so our goal was to build DeFi suite of tools to maximize yield, right? So whenever it comes to that, the decisions of these, anything which has to do with DeFi generally lies to token owners or some side of basically generally lies to governance of the product itself. You can see, and the major theme in my mind, which I was going with, was from Aave and zero exploit sort of thing. So I was like, token has to be there because otherwise there will be no governance. And futarchy is some sort of a governance which hasn't been around for a long time. The traditional governance has been on where you simply vote via tokens. So I was like, okay, it's new. Are we sure that it's gonna work? And do we think it has enough potential to actually beat the traditional one? So Omnipair was sort of test towards that, and also along with the capital. That was the first thing. When even when we are raising via VCs, I think I shouldn't say this, but one of the tier one VC firm and managing partner sort of asked me, "Will there be a token for this?" And I did say, "Yeah, there will be." As soon as we hit certain metrics. So yeah, token was always in mind, mainly because of governance. And when I was approaching few targets, so I was not much worried about that if a token goes live, the capital, what kind of sort of like repercussions of launching a token will be. I was much more worried towards Futarchy itself because it hasn't proved that it will work better than the traditional governance. And luckily, Omnipair and rest of the race had enough time to sort of given me that confidence that okay, it can work.
So I guess you weren't really sold at the first when you first met with Prophet and when he was pitching you this, you were very skeptical about futarchy, right? And
So the thing is, like, I've been bullish on founders from day zero. I don't know what's there's like what Profit and Colin. Like, I'm bullish on them, 100%. But I was not just sold on Futarchy itself because it hasn't been around for that long.
gotcha. But do you think futarchy and token voting really make that big of a difference? And now that you
Mhm.
have actually lived experience with futarchy, uh, can you see a difference in these two governance mechanisms that you could maybe benefit from? And how do you think founders could use futarchy to their advantage if they can even do that, or should they even do that?
Okay, so I will take the first question. One, like, how is it better than the traditional governance? So I'll tell you, like, sort of like there's a sort of a mechanism problem here also. Like, Futaki trading proposals itself are not something which uh, people can make some money from. Now, technically, governance proposals aren't there to make any money from, but in traditional sense, every token holder was sort of forced or had some sort of, you could say, power, or you could say, how would I put it in words? Obligation to participate in the governance proposal because he is holding a certain portion of the tokens. And he doesn't need to have anything other than that to participate in the proposals. In the Futaki sort of sense, you're trading them, and that makes sort of like volume into it game. So you need to have a lot of volume to make certain proposals very much, you could say, profitable, viable. Now, viability considering like a trader can make money. So that is sort of a mechanism problem. It's not a few target problem. It's sort of like a mechanism problem how MetaDAO will fix this in future. Other than this, as a governance itself mechanism, yes, Futarchy has proven that it works, especially the last liquidation that happened with Ranger. Personally, I was against it, but yeah, depending on how investors saw the money and what sort of details they were sold on when they were raising, yeah, it made sense. So TLDR, Futag as a mechanism, seems to be better so far from the traditional one. Other than those, like trade proposals have some sort of a providing value to the market problem, which is basically if I'm a trading on this proposal, how can I make money? And that depends on it's same problem as like as poly market. Like like not every market has volume, so you cannot make too much money from those markets. So that is a problem. So you could say at the same time, is it a problem? Or is it not a problem? Depends on you sort of putting into perspective. But yeah, as a mechanism, it has been working really, really good. And coming back to the second question, which is how can founders take benefit from it? So far, Paystream has only one buyback proposal. There's no other proposal have been. Uh, so I've thought of some ways how founders can sort of take benefit from this. And I think MetaDAO has also allowed this by cutting down the 3.5% fee, which was required to launch a proposal from the team itself. So if there's a proposal coming from the community, you have to pay that 3.5%. And if it isn't coming from the community, it's from the team, you don't have to pay that. So that's sort of like incentivizing for a team to launch proposals without worrying about the initial cost. But from a founder perspective, other than that, I would say I have thought about this one particular thing. So generally, a lot of DeFi protocols have a lot of incentives, and those incentives in a MetaDAO launched protocol are generally very hard to do. But if like in our case, we have gotten like around how much $225,000 at the time when we were doing the buybacks. Those were the amount of tokens that we bought. We potentially could use that amount of tokens to incentivize our users. And that sort of a thing is one of the proposals which I've thought about. Maybe we should do that. Uh, and potentially we might even. But other than that, I can't potentially think of any other way how it. So it depends on how founders are seeing these proposals as, because it's essentially if you have to do anything with a large amount of capital, that's when you need to go a proposal route. And if you have got enough burn rate, then you don't need to go there. And if you're doing a sort of like a huge amount of legal operation, then you can launch a proposals like how most of the companies have been doing. But just take it as a, I would say, board meeting. That would be like easier to tell. Just be transparent what your goal is, and this is why you need. And in general case, it would pass.
I think one critique that I've consistently seen about futarchy and
Mm-hmm.
MetaDAO and these whole and the fact that it
Mm-hmm.
allows buybacks and liquidations is that
Mm-hmm.
it punishes teams who iterate fast and
Mm-hmm.
change, a lot of their products and make pivots, and it doesn't allow them. However, Paystream I think is has taken kind of a pivot.
Mm-hmm.
Um, since you guys have raised, do you think
Mm-hmm.
that had any effects? Do you think MetaDAO allowed you to make this switch, or do you not feel it, and is it just
Okay.
doing
Okay.
it?
So here's something about Paystream which I haven't. Uh, so Paystream has sort of a token which is not moving too much. It isn't too much volatile. Uh, for some reason, and because of that, we haven't faced any sort of a clashback from the community itself who hold tokens. So in that general sense, when we announce in the last monthly update, when I announced that we have technically, I did this in January, but now after having so much uh, update on the product side, it was far much easier to tell people that this is the final version, what it's gonna look like. It sort of was not a pivot itself because initially we did have this in our mind when we were targeting that whole basically give maximize yield, but it was just but we had to go to the revenue part much faster. So that's why we are like, okay, you know what, we have to do this because it will generate far much more revenue than all of these sort of strategies, and it seems to provide far much more value to the end user also because they can make far much more money from generally this tool alone itself. So that's what we took the approach. So you can call it a pivot, you can call it evolution, but from MetaDAO itself, we haven't sort of faced any sort of a clashback, other than that token price is down in a bear market, which is not something which low cap token like Pays can do anything about. So Sol is what, like $81. Bitcoin is 65 or 66. I'm not sure. So other than that itself, there's nothing that you can actually blame it on the team itself. But I can also see where is that criticism coming from, that market has sort of like punishing these founders and the teams for it reiterating very, very fast. Uh, if you have a lot of mercenary capital, you will face this criticism always on Solana. It pretty much comes to that. So you need a lot of sticky capital, which I think like MetaDAO is some sort of solving with the P2P raise. But yeah, this thing is not related to how these founders or what MetaDAO has done. It simply comes to one thing: who are the holders? Are they mercenary holders, or are they sort of like sticky holders who understand the goal of the company and the product, or other institutions? And the latter two, you will not face much more criticism. You will face much more criticism when it comes to product itself. But in the first one, which is the mercenary one, you will always face clash back. Doesn't matter what. But founders has to reveal all of these three. And generally, because the first one are far much more public about it. If they don't feel something is right, they will just say it. And most of the things that they don't feel is like if the token is going down. If the token is going up, no one will say anything. But in a bear market, yes, that does happen to a lot, especially to low cap market tokens. So yeah, I can understand why the criticism is coming. But luckily in our case, we haven't faced that. I think
Can you
that has
walk me?
partially to
Can
do.
you
Oh, yeah, yeah,
can you
please go on.
walk me through? Can you walk me through how the iterating process looked at Paystream in a little bit more detail
Yeah.
on how you guys decided on the initial product, when you guys decided, okay, it's time to, move, as you said, to something that may generate
Mhm,
more value and revenue.
mhm. So the thing was like when we launch with this, and like we have gotten like sort of a very early version of the private beta in November itself, of this whole liquidity provisioning on Radium and Meteora. We built the whole terminal. We had like sort of small subset features which will allow to users to do a lot of stuff which they can't do on the main protocols on like Radium and Meteor itself. But around January, it was very much clear that Meteor is also moving into a direction where they are sort of like making these features on by themselves. So that was like, okay, if the stack on which we are making is itself gonna make these features, then there's no particularly moat left. Second thing was the value which comes to LP providers has a lot of has involved a lot of how do we say there's a learning curve when you're LPing in general, and it comes boils down to something which is very simple. Does this thing makes a lot of sense, and I learn it very fast? That was a sort of this thing which I was approaching when it comes to from a user perspective thinking regarding the product itself. And in that sense, I was like, okay, if I'm not helping a lot, I would not understand how Paystream works. Uh, I need to be an LPer, so that kind of reduces the whole market. Now, if I'm an LPer, and if I can, I generally want to be close to the actual service rather than some sort of terminal which is using that service. So that sort of like clashes between, okay, if I wanted to be as close to the metal, which is in this case as Meteor or Radium, and they are adapting these features, why would I use Paystream? So that sort of a problem started to arise itself. And we could have solved that problem by building a far much more lucrative version of the product itself. But in the end, nothing can beat a smart contract function itself, which does the same thing as what you're doing on a terminal, which is sort of over made on that particular contract. So I was like, okay, we have to sort of here jump on another strategy because this one is not going to provide the value. And that's where we sort of finalized this three sort of strategies, which are like funding rate farming and spot perp, which is sort of like a spot slash perp strategy. And then there was this like NLP perp. And around in February, mid-February, we sort of built all of these three in very early stage. And we were able to see LP perp sort of didn't make sense just because it was barely making any money. and only two strategies were sort of making sense. So we went these two. We have been running. Then we around think like February we sort of started testing them a lot, and in March we sort of went into public beta with funding rate farmer. Did 20-ish k volume with that, and I have seen a lot of attraction from people who I consider like to be putting decent chunk of money in Paystream, and they have said this one thing that they would rather have vaults than the manual process of it. So now we are focusing on automating these things altogether. So and these automation, so this is like I would put it like this. So there's a typical simple to use like a typical maximum yield vault where you can just come deposit money and forget about it. And then there's a your own configs which you can make and automation works on that. And then there's a third, which is a manual way to do it. But if you can think from this, we have to develop the first manual infra to do it, and then we can do the automated part, and then we can have the vaults also. So for the vaults, we are building the vault in the Ranger Hackathon. So you might see something there in 2 or 3 weeks. And for the automation part, which is sort of I'm testing right now with my own capital, and I will share the whole strategy results, how much I made with how much capital in a month, with what sort of strategy on Paystream. So to answer your question, how does pivot looks like inside a product? It just depends on how market is reacting from your communications when you're telling them, hey, we have made this. What do you think about this? And if they think if they're using it, and rather than what they're actually telling you, focus on the actions. Are they actually using it? And if the answer is no, then you need to pivot. It's as simple as that.
And do you think that there's a big user base for these perp funding rate
Yeah,
farms? I
yeah,
mean, you know,
yeah.
I
I would.
just went on the website today and I saw some pretty crazy APYs. Like they were, it was something where I would actually consider depositing because the APY seems like it's worth the risk or the return on investment
Yeah, yeah,
and the
yeah.
risk.
Yeah. So the thing is, like, first of all, I need to tackle that API question because people might get confused. So it's technically an APR coming from the current funding rate ARB which exists. Now, every funding rate ARB has some sort of liquidity depth, which is basically a fancy way of saying, okay, if this particular arbitrage or funding rate exists between hyperliquid and drift, how much capital would it take to fill this arbitrage to get the funding rates to their normal stage, normal values itself? And that is something which you need to consider when you are sort of putting the capital in, because 80% of the arbitrage are less than 20K. Only big tokens like Solana have like a 500,000 arbitrage going on. And in those tokens, you can sort of gauge, okay, if I can put 50K in this sort of an arbitrage, I would be able to survive that. Because what happens if you put more than a certain amount of this arbitrage by yourself, uh, whenever the funding rate sort of changes, which happens in some dexes every 1 hour, every 4 hour, in Astro it happens 8 hours. So what you see is like your opening opposition fees doesn't even get back from the arbitrage itself. So that is something which you have to sort of think in mind when you're considering these all of these APYs rates coming from these arbitrage opportunities. So yeah, that is one thing which you need to consider. The best thing about Paystream right now is you will never lose your principal amount no matter what, because we have this thing running called auto close, which we have tested across every Black Swan event happened in the last 3 years. And the maximum drawdown that we have seen is like 50 cents over 100K dollars. So there's literally no way you're going to lose the whole principal capital amount when you're trading on Paystream among any sort of an opportunity which you see. Now, coming back to the other questions, which were, uh, what were the other questions? I sort of like forgot my trail of thought.
I think you answered all the questions I had there.
Okay.
But we could actually talk about the risk here because I think that's something that's very important. that people
And
know. So
yeah.
what are the risks when I'm depositing into a perp farm like this, an arbitrage farm like this?
I
Since I'm
think the
not
thing.
taking directional risk, is it smart
Hmm.
contract
Hmm.
risk?
So
Like
there's a
what?
yeah,
Yeah.
yeah, yeah. So when you're depositing money on Paystream, so it goes to a Privy account, which is safe, right? And Privy generates sort of two sort of embedded wallets, which one is on SVM, one is on EVM. And the first risk which you take on is the smart contracts which these pops are being have been using. So that's the first sort of risk which you're taking. The second risk which you are taking is the strategy through which you are implementing your capital through. If you soon we will have these configs or bots, how you're going to call it, which will allow you to automate all of these things so it rebalances and everything. But for now, you have to do this manually. And when you're considering doing manually, then you have to need to know every single thing which is happening right now before you decide to put capital in and open a certain arbitrage position. So it basically boils down to one thing. Does any of the perp taxes have a smart contract vulnerability? That's the first risk. The second risk is, does your strategy works the way that you want it to work? That's the second thing. Third thing, you could say even privy. Privy does carry some sort of a risk. What if someday Privy gets hacked, right? So these are the three basic strategies that we you're pretty much taking when it comes to depositing money. And one of them is based on user, which is the second one. The first and the latter one are not. And that's pretty much it, I would say, when it comes to taking risks. And our goal is to tell you as much data as we can, and we are trying to stop opening. We will have a lot of basic features. We are working on the small feature which simply doesn't allow you to open a position more than the liquidity depth of a certain arbitrage. So if an arbitrage only has 10K depth, you will not be able to put more than $10,000. So these sort of mechanism we are trying to initiate to basically protect user from losing their capital. First, one thing which you should be aware about, you will never lose a principal capital, which is like more than 90%. So you will 90% of the capital will always be saved just because we have this mechanism called auto close. Uh, but up to 10% you can potentially lose depending on how you're opening positions. So yeah.
And do both. So right now you have two of these strategies available on Paystream.
Hmm.
Could you tell me a little bit more about the difference between them? Are the risks the
Yeah.
same? Why would I choose one over the other?
I mean, I personally would choose funding rate arbitrage. Simple. Why? It makes more money. It has pretty much the same risk as the other one. And yeah, that those are the basic two decisions. And third thing, most of the volume has been on perp to perp strategy itself. So it has been tested, it has been proven, and it just gives more returns. So those are three reasons which you should be worried about as a user. Now comes to what are these two strategies. First one is a, as the name goes, funding rate arbitrage. So every perp dex has a mark price and an oracle price. And what happens is sometimes when a certain token has been longed by too many users, every hour or every 4 hour or every 8 hour, depending on what decks are you using, a certain amount of fee gets paid by long users to the short users to get the mark price basically normal to the normal value. Now this happened across taxes. So there's a lot of arbitrage which is happening among all of these taxes, and it's not some sort of a thing which you can just solve because it depends on the liquidity itself. How much liquidity do they have into this certain token market, into this certain token DEX? And there's no way every token DEX or every token market and every DEX will have the same liquidity which they can get. There will always be discrepancies, and due to which there will always be arbitrage. Now, Paystream from perp to perp or funding rate farmer basically allows user to deposit capital from Solana itself. And this is only possible in Solana because the gas fees and the way it works is very fast, due to which this thing can only be made sort of like only for Solana users. So if you deposit from Solana, it goes to a privy. Then you can deposit any of the dexes, close a position, open all the positions, and withdraw back to privy without worrying about any of the measly things which involve bridging and those sort of things. That's pretty much the funding rate farming thing. Spot pub is also the same thing in which you are simply opening a spot position of the token, and at the same time you're also opening a per position of the same token just on another dex. And that's how and you're farming the basically the funding rate and a little bit of directional risk. So that what happens is like let's say you open $1,000 value position, so 500 spot, and then from 500 you try to open a 2x position, and then you simply farm the funding rate which is coming from the per position. And if the token goes directional, you make enough money that it rounds up to your principal amount, which was $1,000. But as you can see, if the funding rate is coming from one way, your returns are going to be certainly lower than the other way around. So that's pretty much, I would say, the only difference between those two strategies. And if you have were to choose one as a user, what we want, you want higher returns, okay, and you want lowest risk, okay. So it has to be tested a lot, okay. So which one has been tested more? Pub to pub, which gives more returns, pub to pub, and those are the two basic reasons by which users should generally trust something. And from both of these factors, I would say pub to pub tends to be better. And personally, I'm using it for the testing also. So you could say, yeah. But why do we have spot pub then? So the thing is, spot pub is a really good alternative to even hedge your risk up to a more extent from what you're doing. Like, because delta neutral is already very much good, right? But you can go one step further by checking out into spot pub. So for that purpose it is important, but for most of the users it won't be because they don't have that much sort of capital to deploy um, to take benefit from spot pub. But for vault it is very much important, and we had the infrastructure, we had to put it up. And I think like we might remove it in future and just consider it for the vault feature itself. But yes, to answer your question, pub to pub or funding rate farmer seems to be the best one, which I also like love to use.
Yeah, I mean, perp to perp arbitrage farming relies a lot on different dexes, obviously, and different
Hmm.
exchanges,
Hmm.
which kind of begs the question of how do you guys deal with that? Do you bridge? Are
Oh, no,
are
yeah,
there
yeah.
is there any risk in bridging? Like what happens to my funds when I deposit into
Hmm.
one of these strategies? Does it get automatically bridged, or yeah?
Yeah. So first of all, there's no bridging. The best thing is there's no bridging. Luckily, what happens is the all of these dexes uh, support native Solana assets transfer. So what happens is like in some cases, like in Hyperliquid, it only supports Solana transfers only. So what happens is whenever the token goes to Hyperliquid, it's generally in Solana. Then it gets swapped into USDC on the Hyperliquid side. So in all of the five dexes that we have integrated so far, there is no bridging happening. So there is no bridging risk. What happens is like that's why we have this activity log to ensure. So what this is sort of a not a risk, but you could say the dex problem when it comes to filling orders, which is when you're withdrawing capital from dexes after closing a position. It takes anywhere from 2 to 10 minutes depending on what dex you're using. In some dexes, it happens like in 5 seconds, 10 seconds also. But in some decks it doesn't happen. Lighter is the major one, in which the longest I've seen is like 2 hours. But you are able to see that particular position happening. It's completely based on dexes itself. So the withdrawing may take some time just because the order hasn't been filled, and that depends completely on the dex.
And yeah, I guess that sounds. I mean, that sounds pretty cool. Yeah, you can natively deposit into Hyperliquid on Solana,
Hmm.
and it'll automatically do that. I didn't know that, but that's pretty good. Pretty good to know. And still about risk. So you
Hmm.
mentioned auto close.
Hmm.
I would love to hear more about auto close, and also how do you guys like what happens on something like 1010? Because obviously that was a huge event, and a lot of
Yeah,
capital got
yeah, yeah,
wiped out because
yeah, yeah, yeah,
everybody got caught with their pants down,
yeah,
basically.
yeah, yeah.
And
Valid.
so I'm wondering what Paystream does to prevent a
Yeah,
catastrophic
yeah.
event like that, and how auto
Mhm,
close
mhm.
can make sure that our positions don't get
Yeah,
wiped.
yeah, yeah. So, uh, autoclose is simply a mechanism which we have trained over a huge amount of markers. Like I can show you after the meeting what are these markers and how does the internal tooling looks like. But there's a set of certain markers, like 7 to 9 of these markers have been tracked automatically across taxes, across all of your positions every single time. And these services have been hosted onto like GCP and AWS to ensure that they're running 24/7. If one cloud goes down, doesn't matter. It exists on both clouds. And they have been tested on, I think, 12 or 14 black swan events, which we have considered. And even right now, I sort of trying to run a parameter sort of based testing 24/7 to break it even now. So we have tested it and across every black swan event, including the 10-10 thing. And it would have tracked the position after, I think like it was second threshold where it got the 10-10 scenario. So we have been able to basically so far prove that it works even in black swan events like 1010. In general case scenarios, we haven't also been able to prove the principal amount protection when it comes to opening a position. Let's say you open a position where funding rate suddenly flipped to a percentage which shouldn't been flipped. And this would have been sort of like coming through if you were tracking down the order book data itself, how many orders have been coming through on certain positions, you would have been able to gauge it. Okay, this is sort of changing and funding rate might flip. So you could have also given that sort of a notification to the end user also. Those sort of principal protection we have been able to build in, and also along with this ATO. The thing is, it has taken too much like time on this thing, specifically the Black Swan thing when you're developing. I cannot give you a guarantee though, because black swan events are called black swan events for a general reason, right? They tend to do something which was not supposed to happen. But what I can give you a guarantee of, depending on how these DEX architectures have been made, what sort of safety mechanism they have been built in, we have considered that in mind, and we do check it if there are any updates on those sort of factors or those set of code pieces of these DEXs. And these are changes we ensure that the updated version or basically does these change ensure any sort of risk to the auto close as a feature itself, and we ensure that we do the basically necessary changes to ensure that we are always on top of all of these updates to ensure that your safety has never been compromised when it comes to opening delta neutral position on these taxes. But for if you're looking for sort of like 100% guarantee, we can never do that because black swan events are black swan events for reason itself, right? They tend to do something which was not something which we can think of. But so far, we have been able to do it very, very in a sort of a very strong manner, really, really safe way of closing positions. And we have been able to close all of the positions very early compared to, I don't think any sort of delta neutral bot or delta neutral farmer that exists in the market can do this, what we are doing right now when it comes to protecting users' principal capital.
Okay, how are you guys any different from other delta neutral? Since you
Yeah,
mentioned
yeah,
that nobody can do what you guys
yeah.
are doing, how are
I think
yours
I will.
different?
Yeah, so I will go straight on. Like, so I think the biggest one is like generally the people consider like Thread.fi. Thread.fi is like sort of the biggest competitor in the market, which basically allows user to do a lot of stuff and along with market making and delta neutral bots. The first thing is basically the way it works is like very measly. So only thing you can do is like it doesn't allow far much more niche control when you're considering opening a position like Paystream. So you're not aware of the problems which can happen. First thing is there that, and second thing is there is no such thing as auto close at all. The closest thing which they have is like simply stop loss, which is completely different from what auto close is, as you can pretty much understand. Stop loss, I don't think like if there's no safety protection for users, I don't think how they are better than us at any sense. And I would love to do this experiment actually after this. That's sort of my goal, is where I will sort of put myself along in Tread.fi and along with Paystream and sort of compare what it looks like to be a user for both of these services as a user.
And can anybody try this product right now, or is it still in private invite
Uh,
only
so
beta
what, like
or something like
the
that?
the automation part? Which one? Like, are you talking about Paystream?
Yeah, Paystream. Yeah, Paystream.
Yeah. So Paystream, you can try. It's not in private beta. It's public beta. It's live. You can try it out. Everything, and it works. Automation is something which we haven't given on the public side yet because I'm testing it personally, and the testing takes a lot of time because I'm running a sort of like a 30-day arbitrage farming sort of strategy where I'm doing this myself. And if right now we haven't found any sort of discrepancies yet, and once this 30 days have been ended, those are long enough to say, yeah, it works. You can go around and test it out. So I think around the next month, and you will be able to get the automation thing also, where you can automate and make your own strategy along. I think by that point we will have like a couple more dexes live, and you can deploy it around like 7 to 9 dexes and enjoy your farming returns. Right now, you
Very,
have to do it manually
very
though.
cool.
Manual, yeah.
Okay. Yeah, yeah. I mean that's pretty cool. So for anybody who's listening, you can just go to paystream.finance and try out the app. And since everybody can do it, it's pretty cool. I actually love the design, to be honest. Like props to you guys. I love the colors. I love how it looks. I love the feel of the whole app. Quite a lot. And so you also have something coming up in the next day,
Mm.
if
Yeah,
I'm not
yeah. We
mistaken.
are.
What's that all about?
It's basically we are just finally going public, and this funding rate farmer thing will be finally able. Right now, even you're able to use it, but it's technically still in public beta, right? So we are sort of abandoning that whole thing, and we are finally going public with it. So, and because we have tested everything, it's finally there. I think we are ready for it. So yeah, we're just going with the final launch video and just gonna go with it. And user will be able to use it. It's no more beta this, beta that. It's finally like proper product, which we have finally done, like sort of made. And yeah, we are excited what sort of bugs users are gonna report. And at the same time, there's a lot of things which are upcoming, the vault, the automation. So there's that also. But yeah, tomorrow we're launching the sort of how it works, how you can use it. And yeah, it's not anymore private beta or public beta.
Yep. So for anybody who's listening, which the episode is going to come out on Monday, hopefully Paystream is going to drop the public access on the same day. And well, I guess that also brings us to the question of, well, you guys, how much of the treasury do you guys have left? Like 5 months of it,
Yeah,
or
yeah,
around that?
5 months. Yeah, yes.
Just if you look in the future of Paystream in the next year or so, how do you envision Paystream evolving into something? Do
Mm-hmm,
you think maybe the LP
mm-hmm.
stuff will come back, or are you going to stick to this finally until you get product market fit? And what do you
Yeah,
think
yeah.
happens after the
Mm-hmm,
treasury uh,
mm-hmm,
runs
mm-hmm.
out? Because I think you guys are the closest uh, to running out of treasury, although I'm not 100% sure,
Mm,
but yeah.
no, no, I don't think we are the closest, but yeah, I won't say who is, but I think regarding LPing thing, now that thing is gone. We have tried pretty much every single scenario where it can work, and it simply doesn't seem to work when it comes to what we are trying to build for the end user itself. And the thing is, what we're building right now in the market that we have, it's something which has no one has done because it's a very niche market. Like funding aid farming always goes very niche and niche, and if we are able to deliver the returns which I'm hoping with my strategy I'm able to do so, I have already gotten certain amount of commits from people that they're ready to put this amount of money and these sort of strategies. And with that itself, I think within 3 months, we should be able to hit what our bond rate is giving if the strategy does seem to work, if the returns are satisfactory, considering. And for so far, my goal is to get some sort of a vault live within the next month and have committed TVL, which is more than the treasury itself. And once the market sort of comes back, our token gets repriced, and that allows us to raise more. So there are two ways to go about it. First one is the assets under management has to be higher than the treasury itself. The second, which is gonna be from the wall. The second thing is, which is sort of the thing which I'm testing, the automation strategy. If that seems to work, we will get potentially enough revenue within 3 months that we don't even need to raise. So there are two ways to look at it. The different risk. Will that strategy work? That's the first risk because it hasn't been 30 days yet. Second thing on the vault is will be able to get that asset under TVL enough, which I think I'm very much bullish on that. I think we can.
Very cool.
So
Very cool.
yeah.
Yeah, I think I don't have any more questions to ask you. I don't know if you have anything else to add. Maybe at the end,
Hmm.
any
Hmm. No,
thoughts to wrap
mhm.
it up?
Yeah, I think whoever's listening, if you are sort of like tired of losing money just because of tokens have been going directional or Trump's tweeting something BS and you're losing money left and right, you should start considering making money from yield. And if you are tired from making money from yield in that sense that it only gives you measly 5%, 7%, or 10% returns, I think you should consider visiting app.paystream.finance, and we might be able to change your perspective altogether on yield because the market is very huge. It's just no one was sort of like focusing on certain niches that we are. And if that's something which you would love to do, which is basically make more money without losing the principal capital, while also being aware that there are certain risks, then I would say you should consider owning a certain part of Paystream, which is our own token, which is completely ownership based. It's called Pays, and which allows us as a company to basically grow far much faster and further. Also, along at the same time, giving you the value of being some sort of a owner of the company, which is pretty much technically it's not a share itself, but it works pretty much the same way. I think that would be my last cent in this podcast. Yeah.
Yeah. Thank you for anybody who's listening. Come join our Telegram Ownership FM. Follow us on X, formerly known as Twitter, might I add. And yeah, follow Paystream on X and Maushish also. And thank you for MetaDAO for sponsoring the episode. And I'll see you guys next time. Goodbye.
Ciao.